We are not buying something at extremely exorbitant levels of valuation. For any quant fund, the importance is setting the boundary of that fund. That over the history, if some strategy has done well, then this gives you enough of confidence that in future also it will do well.
Hello and welcome to this very special series where we bring you exclusive conversations with some of India's top fund managers, asset managers. And today I have with me Mr. Rohit Tandon, who is a fund manager at Kotak Mutual Fund. Thank you so much, Rohit, for taking out the time to talk to us. We've been trying to understand the investment philosophies of many of the fund managers, right, in this series. So just wanted to understand, especially Kotak's and yours as well, as to how you look at, is it growth, is it value, like what is the core value and investment philosophy for you?
So at Kotak, we follow a growth at reasonable price,
right,
which is a GAARP philosophy. It ensures that India is a growth market, and within that, what we pick is also a growth-oriented sort of stock.
Right.
But what we do is we put discipline and fundamentals into our approach, so that we are not buying something at extremely exorbitant levels of valuations. At the same time, we are not buying things or companies with loose corporate governance practices.
Right.
So we put those checks and balances in our system. And just to move the GAARP philosophy, I guess it's a very popular investment philosophy for good reason. Something which has stood the test of time is always followed by everyone. The GAARP philosophy of Kotak is backed by the investment team, and the investment team has a long track record. So there is a lot of institutional memory behind this GAARP philosophy. So everybody knows what is going to happen with GAARP. It's not my GAARP is different from your GAARP.
Yeah, correct. Right, correct. But when I was just trying to understand what are the funds that you manage, of course, Balanced Advantage Fund is that something that you look at in the blue chip space, but it's also Kotak Quant Fund, right? That's something, it's a very new concept, Just wanted to understand what exactly it is and how it is different from a traditional approach as well.
So traditionally, the fund manager is backed by the investment team, and he has a good idea of something which is within his investment philosophy and something which is not within his investment philosophy. So he is maximizing on the stocks which are closest to the investment theme that he is doing. And then he is weighing it basis his own biases, something about the benchmark or whatever. In quant, it is also following a philosophy, but the philosophy is different. The philosophy is something that can be put into, say, an Excel sheet and can be sort of explained by that particular thing. In investments, though we call ourselves following an investment philosophy, there are also narratives, and narratives are like stories. Our belief in a certain narrative, person to person, may vary. But in a quantitative strategy, if there is a rule that is following, the rule is the same for everyone.
Yeah.
You don't sort of modulate the rules in between the process. So once a process is laid out, once an algorithm is laid out, it is followed through and through the entire process.
Right.
So it is like a commitment that once you have done, you then don't hear yourself.
Yeah.
You do that.
Right, correct. So, from like the fund manager's perspective, what is exactly your role that comes into here and how then the algorithm works also here?
Yeah. So, for any quant fund, the importance is setting the boundary of that fund.
Okay.
Otherwise, if you set a very narrow boundary for any quant fund, it will give return, it will give out stocks, or it will give a portfolio that is meaningless. And if you set out a very, very broad sort of a pitch for the fund to operate in, it will give you all sorts of stocks which you are not comfortable with. In our case, in Kotak, what we do is all the stocks which are part of the quant fund, they are also stocks which are covered by our analyst team. So this ensures that there is a strong level of corporate comfort on fundamentals that we have. So it is not like picking out stocks from thin air and then combining them around something and then putting out the portfolio. It is sort of matched on fundamentals. It is matched on quality. Yes, the price may differ. The portfolio or the algorithm might be more sort of weighing that particular stock higher or lower, but the fundamentals, the corporate governance, that is all checked.
Right. And how do you incorporate the risk, or as an active fund manager, you might be keeping yourself updated with any fear or risk that you might be seeing that it's going to be emerging, right? In a quant strategy, like how do you kind of fit that in? Because there's some geopolitical tension that's suddenly arisen. So how does that go into that whole strategy?
No, very important question that a human being can react to certain
Correct,
events.
yeah.
But a quant fund, if you are sort of reacting to every event, then you are sort of compromising the process.
True.
So I would say here, one should look at these systematic strategies from an empirical lens. Say over the next the last 10-15 years, they have delivered a certain alpha over whatever benchmark and whatever way you have constituted it. That is enough proof that over the history, if some strategy has done well, then this gives you enough of confidence that in future also it will do well. Yes, there will be differences between discretionary and systematic strategies. So I'll never tell you that please go only for systematic or please go only for discretionary. But I think as investors evolve, then there would be some part of their portfolio which should be exposed to systematic strategies.
Right. And how do you see quant as a strategy evolving in India? Because it's still pretty much a new concept that's being trying to be adaptive, right? How do you see that evolve towards at least the course of the next few years?
See, it all depends on how these funds perform. Because if they meet the test of time, if it is just a flash in the pan, then it is one good song from one singer which everybody forgets after some
Right,
time.
correct.
But if they consistently give alpha year on year, and that is consistent alpha, then obviously people will start looking at the fund. So they have to deliver performance.
Correct, that's true. Thank you so much, Rohit, for your time. It was very interesting to understand how growth remains the core, but obviously there's new strategies that emerge, and you have to obviously keep that into mind and give all sorts of options to the investors, right? So thank you so much for your time, and we will see you in the next episode.